Singapore will try to recoup costs incurred for the HSR project with Malaysia if Putrajaya confirms that the rail link has indeed been scrapped. The city-state has already spent more than 250 million Singapore dollars or 743.98 million ringgit, and the figure is still growing as Singapore continues works on its end of the project. Singapore says it sent a diplomatic note to Putrajaya last month to get clarification on Malaysia's official position, but has yet to receive a response. What Malaysia has confirmed is that it will stick with its long-standing agreement with Singapore on water supply, despite what looks to be a revival of an old dispute by Prime Minister Tun Dr. Mahathir Mohamad. Mahathir had reportedly said the price of 3 cents per 1,000 gallon is ridiculous and spoke of renegotiating the deal. However, in an interview with Singapore's Sunday Times, Finance Minister Lim Guan Eng promised to keep our end of the bargain, although he did describe the 1962 deal as lopsided. Top Glove says it overpaid for its acquisition of Aspion based on an interim report by an independent accounting firm. The group says after it forked out 1.37 billion ringgit to take over its smaller rival, it discovered irregularities in certain balance sheet items and decided to probe further. According to the accounting firm it hired, Aspion's assets had been overstated by 74.4 million ringgit, while its acquisition price had been overvalued by 640.5 million ringgit. That led to its decision to sue Aspion's holding company LPI Capital, 2 of its directors and ACPL for at least 714.86 million ringgit. The litigation is not expected to have any impact on Aspion's business operations, and the group remains upbeat on its outlook. Top Glove's share price hit limit down today, tumbling as much as 30% to 8 ringgit 47 cent before ending the day at 9 ringgit 13 cent. LPI Capital made less in the second quarter of FY18 due to fierce competition in the Malaysian general insurance industry. Net profit fell 3.4% to 65.74 million ringgit, while revenue was flattish at 355.05 million ringgit, up from 352.71 million ringgit previously. It declared a dividend of 26 cents per share. The insurance industry is facing stiff competition, with players taking advantage of the liberalized environment to build market share. Still, despite the competitive market conditions, founder and group chairman Tan Sri Dr. Teh Hong Piao says LPI's subsidiary LoanPack Insurance managed to keep up its growth momentum. He expects the group to sustain its performance in the second half of the year. All those in the administration, including the Prime Minister, Deputy Prime Minister, as well as their political secretaries, will be regarded as public officers. According to PM Tun Dr. Mahathir Mohamad, this means they will all be subject to anti-corruption laws. This follows last year's decision by the KL High Court to strike out a lawsuit against Dato Sri Najib Razak for abuse of power after ruling that the Prime Minister is not a public officer. Mahathir's administration is now working on amending existing laws and the government's code of ethics. Among others, these amendments will make it compulsory for all those in power to declare to the MACC not just their assets, but any receipt of gifts over 500 ringgit. The government is also looking at laws to govern the funding of political parties for elections. In Germany, for instance, funds for polling came from the government, a practice that might be emulated here. IHH Healthcare is said to be likely to gain control of India's Fortis Healthcare in binding offer to buy at least 51% in the struggling hospital chain for 4,700 to 5,400 crore rupees, or at least 684.2 million USD. Citing 2 people aware of the bid details, Indian Financial Daily Mint reports that IHH outbid TPG-backed Manipal Health Enterprises, the only other contender for Fortis. IHH reportedly placed a higher per share offer for the promoters. It also offered to buy out Fortis's non-promoter shareholders at a 10 to 15% premium to the agreed purchase price. According to Mint, IHH will first buy about 25% of Fortis through mixed of direct acquisition and preferential allotment. It will make open offer to buy for an additional 26% stake at least. The report goes on to say that IHH's acquisition plan for RHT Health Trust separately through a secondary infusion is also somewhat better than Manipal's offer. RHT is a Singapore-listed business trust that owns some of Fortis's assets.